Off hundreds of employees in its mortgage division, underscoring the wide-reaching impact of rising inflation and mortgage rates slowing down the U.S. housing market. About half of those employees will be moved to a different division. Now, last month, U.S. existing home sales tumbled nearly 3.5%, with the median housing price topping a new record of $400,000. Mortgage rates also on their way up, now sitting at an average of nearly 6%. So joining us to break down the housing market, real estate expert Uri Mann. Uri, thank you so much for being with us.
Great to see you, Nichole. Great to be on the show.
Absolutely. Okay, so we're seeing that these interest rates are rising. They may continue to rise, but does that mean home values are dropping?
Well, actually, no, home values are not dropping. In certain markets like Austin, where you've seen huge increases year over year, over 50% increases in prices, there you see some softening. You see maybe the average home price is selling 5% less. You can read all the studies, Forbes, et cetera. They all say there's very little movement in the pricing. The problem is we just don't have a lot of transactions. So everyone's focused on that. They're saying, oh, so few homes sold this month. Well, that's because there's almost no inventory. So when people are worried about a bubble, there really isn't a bubble. When we had a bubble last time was because people could not afford to make their mortgage payments, right? They were out of jobs. We have extremely high employment right now. And the people that have purchased homes in the last few years have the highest average FICO scores in the last decades of ever. So we actually have a pretty secure housing market. Home prices, as you saw, are hitting a record high at this time. There's no indication that there's going to be a dramatic collapse in real estate prices in the United States. It's just not going to happen. And JPMorgan is just a little late to the game, poor planning on their part. This is obviously going to happen when there's going to be fewer and fewer homes on the market. You can write fewer and fewer mortgages, so you can't afford to keep as many staff.
All right. So maybe some good news there from you, Uri. Yeah. But, you know, we talk about the 80s. There were certainly some tough times back then. How likely is it now, 2022, that we're going to see mortgage rates eventually jump to levels that we haven't seen since the 80s?
Well, that's a great question. I can't predict mortgage rates, but if I could, I would be extremely wealthy. But I would say this, that right now, there's no indication. We have so many positive forces for the housing market. Wall Street is still gobbling up homes. They're out there buying homes to rent them. There's no alternative for people if they sell their home and rent. They're paying a huge amount of rent. Rents are up 15 to 20% year over year nationwide. So they move out of their house because they don't want to make a mortgage payment. They don't have good options to rent either. Employment is extremely strong. What you can look at is what is the average mortgage payment that someone has to make now compared to a year ago. If they bought a $400,000 house a year ago, their payment might have been $1,600 a month. They buy a $400,000 house today, their payment is $2,100 a month. So that is having an impact on the numbers of people that are qualifying to buy homes. But still, with such little inventory out there in the market, so few people willing to sell their homes, there's really no chance that there's going to be a big collapse, a big bubble bursting. So we're in a very unique period. We never had such high employment,
right,
and high interest rates. So it's going to be it's unpredictable what will happen in the future.
Well, because it is so unpredictable right now, what's your advice to someone, either looking to buy or to sell?
Okay, well, my advice is if you can afford it and you can make the numbers work, it's always a good time to buy real estate in the United States. One of the biggest gifts that we have, which other countries generally don't have, is this 30-year fixed rate mortgage. So if you buy a home, even if you end up moving out in 3, 5, or 10 years, eventually it's going to be cash flow positive for you because, as you know, rents will always continue to go up. An apple 10 years ago costs a lot more today, and rents will always go up. So eventually you'll be cash flow positive. So I always say, if you can afford to put the money down and afford to make the payment and you're not worried and it doesn't stress you out, it's always a good time to buy a home in the United States. And by the way, especially in Houston, Texas.
All right. Well, clear advice there, Uri Mann. Thank you so much.
Thanks for having me today.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.